about the series. Leading Conversations with FBN Quest is a webinar series created to bring you market, industry, and consumer insights and analysis that are crucial for individual and corporate investment success. The series features leading professionals at FBN Quest, as well as other industry experts with experience in corporate and private investment management, wealth preservation, financial advisory, and other areas of interest. We hope to open your mind to a world of opportunities through these sessions, and we very much look forward to engaging with you. Today, I'll be having an hour-long conversation with our guest speakers, Ifeoluwa Oladapo-Dixon of FBN Quest Asset Management and Mutiat Olatunji of FBN Quest Trustees. Ifeoluwa Oladapo-Dixon is an Assistant Director and Head Fixed Income Solutions at FBN Quest Asset Management. She's a detailed investment professional with key competencies in portfolio management, financial statement analysis and tracking, as well as forecasting macroeconomic and key market indicators. Her over 16 years of experience span across pensions, insurance, and asset management industries. Ifeoluwa is an active advocate for the growth and development of the asset management industry. In her capacity as Vice President of Fund Managers Association of Nigeria between 2020 and 2022, and in her capacity also as Chairperson of the Technical and Enlightenment Committee between 2018 and 2020, she pioneered the standardization of mutual fund benchmark, as well as the appropriate categorization of mutual fund. Ifeoluwa has been in constant engagement with the regulator to ensure and enhance professionalism within the industry. She's a certified treasury professional, certified Islamic finance executive, and an advanced certified Islamic finance executive. She holds a master's degree in corporate finance, and she currently is undergoing a doctoral degree in investment finance. Mutiat Olatunji is a private trust specialist at FBN Quest Trustees. Mutiat has vast experience in estate planning, advisory, structuring, as well as estate administration. Taking a cue from her legal background and litigation experience, which expose her a great deal to the real-life implications of the lack of proper estate planning, Mutiat has assisted several clients to set up comprehensive estate plans that meet their immediate and future desire. She currently administers a number of estates, ensuring growth and profitability, and she has facilitated presentations on estate planning with primary focus on conventional and Islamic estate planning using various tools. Mutiat is a legal practitioner with several years of experience. And so on this note, I would like to welcome our guest speakers for today. I'm thrilled, I'm excited, and you can tell, not just because the theme is right up my alley, but because we have cerebral and consummate professionals to lead today's conversation. Mutiat and Ifeoluwa, welcome to you.
Thank you, and good afternoon to everyone.
All right, before we proceed, let me inform you that there will be 3 polls in the course of this session, the first of which will be coming up very shortly. So do well to participate, as the outcomes of the polls serve as very important feedback to us. Also, let me say that you can send your questions via the chat room, and also note that there will be a Q&A session at the end of the program. Please send your questions via the chat room. We'll be happy to answer them. So just before we delve into our discussion, I would say let's take the first poll. We can take the first poll now. It should be on the screen right away. So we take the first poll, and it reads: how often do you consider your beliefs and principles before making investments? Always, often, sometimes, never. Let's do that in 30 seconds. I think we will do that in 30 seconds. All right, so there you have it. 48% of the respondents always consider their beliefs and principles before making investment decisions, while 25% often consider their beliefs and principles before making investment decisions. We have 15% of the respondents saying that only sometimes do they consider their beliefs and principles before making investment decisions. And 13% are of the view that they hardly or have come up with a response that suggests that they never ever consider their beliefs and principles when making investment decisions. So interesting, and this would be one of the talking points, I believe, as we go on. All right, so we go straight into today's discussion. And but before we go in, let me remind you that the theme of this edition of Leading Conversations with FBN Quest is planning your future with ethical investments. So there will be 2 more polls in the course of this session. Please, as I mentioned earlier, do engage with us. The outcomes of those polls would not only form a part of our talking points, but would also be useful as important feedback. So we delve into today's discussion. I would like to start with you, Ifeoluwa. I mean, almost everyone in the audience would understand what those 2 words, ethical and investing, mean. But can you give us a sense of what an ethical investment is?
Thank you so much, Kudus, and good afternoon to our audience again. Just like you've said, 2 words, ethical and investments. And so I'll go with ethics. What is ethics? It's a set of moral principles. Then investing, on the other hand, is putting your money into financial assets or instruments with the expectation of achieving a profit. So when you then combine the 2, ethical investing, what it is the practice of using your own personal or moral beliefs, right, that you hold on to, moral principles, as the primary filter for the selection of your financial assets or financial instruments, as you may want to call it, in your portfolio. And so this, in a way, gives an investor the power to allocate capital to companies whose practices and values align with your personal beliefs. And now we have different beliefs, right? Some may be rooted in environmental, some may be rooted as a faith-based or religious, and others could be political. Under environmental, that's where you have ESG or, green investing as well. And so I would say knowing your values would help you choose your ethical investments, right, based on your personal beliefs. And so you need to start asking yourself this simple question: what activities would you like to avoid investing in? If you say, oh, I don't like to put my money, or I don't like smoking, you may then choose not to invest in a tobacco company. That is an ethical investment that you're doing, by saying, no, I don't want a tobacco company in my portfolio. I don't want a brewery in my portfolio, things like that. So it all depends on your personal beliefs, personal principles, moral principles. I'll put it that way. Moral is key in it to make it an ethical investment or ethical investing.
Great stuff. So what you're saying, in essence, is we're looking at a broad spectrum. We're not looking at just a certain form of ethical investing. We're looking at ESG. We're looking at a variety of things, right? Okay.
Exactly.
Okay, great. All right, Mutia, I think Ifeoluwa has done a great job in easing us into the discussion. But can you give us a greater sense of, the different types of ethical investments that there are? Just highlight those, various types of ethical investments that are. Go into a bit more details. I know Ifeoluwa mentioned a few of them.
Okay, so thank you very much, Abdul Kudos. Like Ifeoluwa said, she had mentioned a couple of the types of ethical investment that we have, but I'm going to focus on 5 basic types of ethical investment. You have the ESG, which is the environmental, social, and governance investments. So this just basically entails a person ensuring that they put or they invest their funds in a company or companies that are environmentally sensitive, companies that ensure social balance, for example, gender balance, and companies that have good governance practices. You also have the socially responsible investing, which is the SRI. This has to do with ensuring that you put your monies in companies or entities that do not take part in harmful activities. Then you have the sustainable investments, which is the green investing. So this is ensuring that you invest in companies or entities, again, that protect the environment. So we have example of investing or putting your funds in recycling company, waste management, or companies that are actively involved to ensure they use alternative energy. You also have the impact investing. So impact investing is more like ensuring that you invest in entities that make useful impact to the society. For example, you can decide to invest in the healthcare industry or in the educational industry, even in the recreational industry. All of this is ensuring that people are benefiting and there's an impact, or more or less they're giving back to the society. And you also have the moral investing. So this is just investing in line with your morals, your principles, and your beliefs, like Ifeoluwa had said. So for example, if you believe that you don't want to be involved in anything betting or tobacco, for instance, you actively ensure that your portfolio does not contain anything that has to do with betting or tobacco. And you also have the faith-based investment as well, which is just investing in line with your faith and your beliefs.
Fantastic, fantastic. I like your response. So can we now go into faith-based investment? And I say faith-based investment because Nigeria is, a very faith-loving country, but very religious as a people. So, give us a sense of what a faith-based investment would be.
Okay, so faith-based, like the name implies, just means investing in line with your faith being your religion. That's just an example. So this is actively and taking a conscious effort to ensure that your investment portfolio, no matter the portfolio or whatever vehicle you are using, is 100% in line with your faith and your beliefs. So for example, for Muslims, right, they always look out for Sharia compliant investments. And what this simply means is that you are putting your money in investments that do not have riba. Riba is interest. So now I'm sure people will be asking that, so as a Muslim, how do you invest, or what's the essence of investing if you won't get interest? So you're not getting interest, but you're getting profits. And there are various tools, Islamic compliance finance tools, that you can use to achieve this. Another example is you might not be a Muslim, but your faith is against gambling, right? And you ensure that you do not put your money in betting companies or any other companies that are gambling inclined. There are some people that also tell you that according to their faith, they can't invest in hotels, right? So they would not invest, or you won't see anything that has to do with hotels or even alcohol companies in their investment portfolio. That's the long and short of what faith-based investment is. It's just investing in line with your religious beliefs and your faiths.
Great. All right, let's track back a bit. Ifeoluwa, please, could you give us an idea of what this call for energy transition and the drive for cleaner energy, what it has meant for ESG, and how popular do you find ESG and green investments right now? What are they to start with, and how popular, how common is ESG and green investment?
Okay, so advocacy really, it's global, if I will put it that way. It's not just, a particular region, and it's on the back of climate change. We could see issues around, the flood that we have now, even in our country, and, in some other areas or parts of the world as well. And so for green investing, again, it's just like Mutiat has mentioned, is a form of a socially responsible investing, where investments are made in companies that support or provide environmentally friendly products and practices. They are not into carbon emissions. They're trying to control it. things they are doing, they are making sure it's, if I can use the word organic in a way, for some agricultural products, right? And so in a way, in the nutshell, trying to conserve our natural resources so that we are not depleting and it's not causing more damage to the climate. And that's what eco-investing or green investing, as we want to call it, it's all about. And so when you then invest in such companies, and thankfully she mentioned recycling companies. So if you know of any recycling companies that is offering a bond, that is offering maybe a CP or even equities, and you then invest, that is ethical investment, because you are, you align your values of climate change that we are all talking about to that part of investment that you've just made. In terms of ECG, he has explained is environmental, social, and governance. You're looking at how people are being treated, how they treat the environment in which they operate. You want to look into that. You want to look into their corporate governance. You want to look at their gender based kind of the structure within, how even employers treat their employees. These are things that people have started looking into, right? To say, okay, you know what, I love this company because they are not running generator with or powering their gen with diesel that is making smoke or flames all over. They are using solar, things like that. And so, I would love to invest my money in such a company. And so these are things, is a clamor really for the climate change, for us to live in a clean environment, right? Here at times, if you see, it can be polluted just because of certain carbon monoxide that is being passed through different means. And so that is the whole essence of ESG, whether you call it green investing, impacting, just to make life more bearable for people, so that we can live a life full of peace, and we can even live long. When we live healthy, we are breathing in clean air. And so these are things that, when they see companies that are doing such, we need to encourage by investing in them.
Great. I mean, I couldn't ask for more. All right. So what you're saying in essence is that, when you invest in line with environmental and social and governance considerations, you are in a way also engaging in some form of ethical investing. Yeah. Fabulous. All right. So let's move to this next question. I'm wondering, are there any certain certifications or standards that investors tend to look out for before choosing a manager, especially with respect to ESG or other forms of ethical investing? Are there, or is it left to, each investor to make a choice of what is compliant with his own values and principles?
Okay, all right. So there are organizations that do provide stamps of compliance with a responsible fund manager. So if a fund manager should come and say, oh, this fund is ESG or impact or green bond, even for the green bonds that we have, there is a stamp of compliance that truly the money is being used, for what is meant to be, which is whether recycling, whatever, renewable, whatever they might have timed it to be, it's in line. And so there are certain organizations that do provide stamps of compliance as well. Now, when you then look at the faith-based and, leaning towards Islamic finance, if you say your fund is Sharia compliant, you must have a Sharia compliance certificate that is being endorsed by the fund Sharia Advisory Board. Now, these Sharia Advisory Boards are scholars in Islamic principles. So they are looking into the underlyings of the portfolio itself of the fund by ensuring that each single asset are actually Sharia compliant, right? The Sukuk bond we have, you could see the assets backing it up in terms of the role, the FG and Sukuk. There are Sharia board as well that is overseeing what the funds are meant to be deployed for. And so, yes, I would say there are organizations that do give these stamps, or even if the Sharia board may not be an institution, it could be individuals, right? But it's of essence that you have a certificate showing that, yes, I'm compliant by saying I'm an Islamic fund or a Sharia compliant fund, or even I'm operating ESG or a green investment type of thing.
Wonderful, wonderful. Mutiat, is that something you want to add to Ifeoluwa's answer? Ifeoluwa just gave a very, very comprehensive response, but who knows?
So I think if he has basically said everything, right? The only thing I need to add is that apart from the regulatory compliance and all of that, you also need to look at the track record of wherever you're going to and the brand. What's their track record in investing? What are their clients saying? What's the feedback? What kind of brands do they have? You also need to look at their research and advisory skills as well. And that's why most times we'll tell you to come to us at FBN Quest Trustees, because this is what we offer, the track record. We have the brand name. We've been in the business for so long, and we're always available to advise you on the best tools to use when considering ethical investments.
Very good. I can see you're doubling as a marketing officer, but that's good. That's good. All right. I think at this point, we would be taking the second poll. It should be on the screen in a bit. Meanwhile, I'd like to remind the audience that we would have a question and answer session at the end of the program. Please partake and engage with us. So the poll 2 is up. It reads, do you think investing ethically means getting lower returns? Yes, no, I'm not sure. Let's do this in 30 seconds. I'm sure we can do this in 30 seconds. Do you think investing ethically means getting lower returns? Yes, no, I'm not sure. It'd be nice to know what people think. Wow. All right. 56% of the respondents believe that investing ethically doesn't mean getting lower returns. 56%, let me take that again, 56% believe that investing ethically doesn't necessarily mean that you get lower returns. 15% believe that you would definitely take a discount. 15% believe that yes, it means you would have to settle for lower returns, while 29% are undecided, 29% are not sure. Interesting. This is really, really interesting. I'd like that, as we go on, we take some of these responses into consideration, and they definitely would feature as we move into our second round of discussion. All right, so we've had a very interesting discussion up to this point. We've seen ethical investing, the broad spectrum. We've seen ESG, green investing, political considerations, gender-based considerations in investing, also faith-based considerations in investing. So interested, dynamics to the discussion. But I want to move on to something similar to what we just saw on the screen in the second poll now. And I'll be starting with Ifeoluwa. Ifeoluwa, how do the returns on ethical investment compare with those on traditional investment classes? Because we had a sizable number of the respondents say that, look, they think they would have to settle for the discount, although the overwhelming majority feel that they wouldn't necessarily settle for a lower return. So what do you think? Do you also share the opinion of the majority?
By saying they would not have a lower return because they've chosen to invest ethically. Yeah, and so that's my own answer as well. Because from a purely mathematical profit perspective, it is not better. They are not necessarily better than conventional investments, and neither are they worse off. there's been data to this or research, you know, even if you backdate it or using back data to assess your returns. And when you're doing your analysis, you would see that there are periods where conventional investments might have yielded something slightly above, I'm stressing it. And there are years as well that ethical investment has done better than conventional. So it's neither here or there. It's a function of what's going on in the environment, right? That I would put it at. So because you are in or investing ethically doesn't mean you would lose. You will still benefit from it, but from even looking out of monetary terms, you know, when you then look at some other benefits or the return in a way by saying, by investing in this particular company, you know, there is reduction in smoking, there is reduction in fuels emissions, you know, you are recycling your plastic, the environment is, or the climate is getting cleaner, we are breathing new air. That on its own is a form of returns that you may not be able to monetize in a way. And so that again is another plus to ethical investments. But by and large, you are not worse off if you invest in ethical investments. You aren't in terms of returns, monetary returns, you aren't. So I would even say it's dual benefit. You would get the economic return by your naira and kobo, and also because you are affecting the society positively, if I can use that word.
Fantastic, fantastic. So you've talked about social returns as a complement to even the private individual investment returns. So we're looking at environmental benefits of, you know, ethical investing. Great, wonderful. But let me stay with you, Ifeoluwa. How can investors keep track of their returns? So we're talking about, you know, the fact that your returns are not necessarily better, but do you have a situation where people just invest based on sentiments and go to sleep? How can they actually track their investment returns?
So it all depends on the asset they've chosen, right? If you're in a mutual fund, and if the mutual fund is with like FBN Quest, right? Because we have a Sharia compliant fund, which is faith-based, in a way ethical. Prices are being published on a daily basis. You could as well go to our association, Fund Managers Association, to see. So there is transparency when it comes to that. Even if it's in equity, you have your prices as well that you can monitor on a daily basis. So I'm saying tracking returns really is not different from when you invest in a conventional bond. It's not different from when you invest in FBNH shares on the Nigerian Stock Exchange. It's not different. So the only thing is the company in which you've chosen to invest in, right, are doing this XYZ that we've explained earlier by saying, you know, this company is not releasing carbon into the system. It's a recycling company, but it's listed, and I have investment in it. It's the way Nigerian Stock Exchange, you know, would publish, Nigerian Exchange will publish FBNH share price. It's the same way they will publish the recycling company's share price. The same way you will do your analysis or return computation on First Bank is the same way you will do it for the recycling company that is listed. So nothing is different. The way you will track your money market fund or bond fund is the same way you will track your halal fund, if you see what I mean. So there is nothing outside of the normal, only that the companies and certain principles or standards used in identifying that this investment is ethical. That's just it.
Great, great. I mean, so what would you say? What would you say about how easy it is to liquidate your existing investments in ethical funds or ethical assets? ethical financial assets, how easy is it to liquidate them? You may have them, and perhaps for some urgent reasons you want to liquidate, or if you want to short it and enter into another asset. So how easy is?
I think, thankfully, sorry, we have a green bond, right? So I will use that as an example. We have green bond, we have, and I think a corporate one as well, by Access. So if you buy any other corporate bond, right, maybe a bond from First Bank, and you want to sell, you will take it to the market and you will sell it. It's the same way you will take that green bond to the market and you will sell. It's the same way you will take the Sukuk, FGN Sukuk bond to the market and you will sell. That is it. The same way for equities. You will sell it in the market at the market price. It may either be at a loss or at a gain, but you will be prepared if you are not holding to maturity, right? So it's the same way how a conventional bond would react, that yours as well will react, depending on the timing, market timing. Now, when you come to mutual funds, and like I said, like the FBN Allowed Fund, and you come in to invest, it is expected, and this is circular, that you will stay within the fund for a certain period of time, which we call the holding period, not a maturity period, but the holding period. So for argument's sake, if I've said that in Allowed Fund, as we are coming in afresh, you have to stay within the fund for 90 days. And that is just to enable the fund manager to make use of the money, Islamic contract, and get certain things and return, right? But if you come and you say, oh no, it's an open-ended fund, you don't want to stay till the end of the day 90, right? You want to move out because of emergency or anything. There is a penalty clause, which will be stated from onset, which is in the prospectus and in the trust deed of the fund. So there is nothing hidden. It's very transparent. You would have known even beforehand that if I need to get out of this fund before my day 90, I will be charged XYZ on my profits, right? And so if you're prepared to take that penalty, then you would come back. The fund manager will buy your units back, because the fund manager is meant to provide liquidity at any point in time. It's meant to be seen selling and buying units off unit holders. So again, by and large, for the fact that you are in an ethical investment doesn't mean you are stuck. You can still come out of it anytime you feel like, yeah.
So if you put a traditional asset side by side with an ethical investment or an ethical asset, would you say that there isn't any difference whatsoever in terms of market liquidity risk? There isn't any difference?
I would say there is no difference in all honesty. So if for every seller there is a buyer, right? For the FGN Sukuk, you can take it to the market today. You will get a buyer for it. The issue is if you are willing to take that price, that is it. If you're willing to take the price, you would get people. There are instances where people would come and ask that, okay, somebody needs to sell something, right? FGN, if you're willing to take it at that price, you will get a buyer for it. That's why I said, you know what? It's a function. If you want to get out, you will get out, but you must be prepared to take the hit if there is a hit. And you may be lucky that it's when market is in a boom and you will come out whole. So, but bottom line really is, I can't say you can't liquidate. It's your money. You can move out. But again, it would be nice to know that I'm investing for a purpose. Right, I'm investing, it might be a target kind of investments. And so again, you are reviewing your values and your principles. Why exactly did I buy this investment in the first instance again? So you want to reassess that before saying I want to sell if the money is not really that needful, or you can't get out. You can't get out.
Fair enough, fair enough. Mutiat, I've allowed you to take a breather. So I will come back to you now. So in your opinion, to what extent does ethical investment reduce portfolio risk? We've talked about returns, right? Now let's look at the risk dimension of the discussion. Does ethical investment contribute to any reduction of, the risk profile of your portfolio?
Okay, thank you very much. So the truth is that whether you invest ethically or not, the market risk remains the same. So you talk of things like inflation and the rest. So every investment, no matter the portfolio or the type that you choose, we still face more or less the same kind of risk. The only comforting part is that at least you are sure that you're investing in something that aligns with your faith, like if your Lua says. So maybe that will give you a bit of comfort. But the other risk that you face in the market is more or less the same. You have inflation, you have liquidity and all of that. The risks are basically the same.
Okay, I believe you, but then it's, as you said, it's not comforting. I would have thought that, the fact that I'm investing based on my convictions and my values, I should have some cover. And you're saying it's not the case. If otherwise, that's something you want to add to what Mutiat has said.
So when you say portfolio risk, now you've narrowed it down to, because when I look at it from the angle of diversification, to say for the fact that I've diversified my portfolio by having ethical investments, right, in it, am I immune from certain risk? Mutiata said you aren't in a way, but diversification has helped you to reduce your portfolio risk. I'll put it that way. That diversification has helped to reduce that portfolio risk. And if you look at it, why did I say so? For the regular investment, the conventional one, it's only based on profit risk compliance standard, right? It's on profit risk compliance standard. That's all for the conventional ones. Nothing attached to, are you doing something right? Are you investing in a gambling company? Are you upholding the Sharia principles or whatever? Or are you ESG compliant? Nothing as regards that. But when you then have ethical investment, right, you've layered that compliance standard by another level of standard, which is, it could be the ESG standard of, oh no, if you say you're an ESG company, this is XYZ that you need to do. You're not allowed to do certain things that the conventional ones would have done anyways in a normal way. And then when you then have faith-based, you are layering it again with stricter principles, right? By saying you can't invest in pork, you can't invest in companies buying firearms, you can't invest in gambling, hotel, whatever, So that in a way has reduced your outlets. And with that, it's making your risk to reduce as well. So there is recently, there is something on a cement company that has a parent company in Paris, in France, that actually supported terrorism in Syria way back. Now that company has subsidiary or a company in Nigeria. Now you can't say the fine they've been given would affect their return. Okay, which in a way, and if you're invested in that company, it will affect you as well. But because you have chosen to invest ethically, knowing fully well that company on its own will not support terrorism by buying firearms. So that fine they are paying, they won't have to pay it, which will impact the kind of return you would get and your risk as well. So I'm saying investing in ethical investments makes the standard of a higher bar, and in a way to reduce the risk that you would face as an investor, because certain things has been eliminated that would cause the risk to occur. So that's it. If you invest in gambling, it's either yes or no, right? And if it's a no for you, it's biggie. So, but if you are not there, there is peace of mind that my money will not go. So that's just it. Anyways, it does reduce portfolio risk.
Very interesting discussion we've had up to this point, but we may want to slush things around, right, Ifeoluwa, and say that look, if we expect that risk would be positively impacted upon, then returns too should behave in a similar pattern. Would you say?
But it's always the case, right? Risk and return.
Yes. That's exactly the point.
There is always the case, whether conventional, whether ethical, whether faith-based, whatever. Risk, return. Exactly. So if you understand that principle, is the risk return principle. You can't say you do not want to risk at all. Life itself is a risk. So you can't say you don't want to risk at all in your portfolio. It's not possible. And you still want the return, right? So holding your money and not doing anything is risk on its own of you losing it or inflation catching up with it. So you can't take out to risk. You can only reduce it. That's why I'm laying emphasis on that reduction. But that risk will be completely eliminated because you have ethical investments. It's no, but it will be reduced.
Absolutely, absolutely. I mean, thank you. I think our speakers deserve a round of applause. We should applaud them. I want to see applause in the comment section. They've had up to 30 minutes, more than that, of very, very wonderful contributions. I want them to be applauded before we continue. Let me pause. Okay. All right, great. It's coming in. More and more, please. They should be appreciated. All right, so we've looked at the risk return dynamics of ethical investing, and I think on a final note, there's this dimension of it we need to look at before we move on to the third pole. Depending on who you ask, right? If you were to ask Joe Biden, for example, you say we're not on the path to a recession. Of course, there may be political undertones to that. But the overwhelming majority of analysts believe that there is a recession on the horizon. Just yesterday, Bloomberg and Fitch and a number of other reputable analyst organizations have said, look, we're seeing an 100% chance that there would be a recession by October next year. And of course, besides the recession, we already have a very disturbing inflationary trend, several other global economic headwinds. What does ethical investment promise investors in the light of all of this? Don't forget also the local dimension to it. Inflation rose to a record high, 20.77% just in September. So what does all of this, in the light of all of this, what does ethical investment actually promise investors? Ifeoluwa, once again, I think you will take a breather after this.
Okay, so that's fine. And I think Mutiat has established something earlier by saying the fact that you are an ethical company, if I can use that word, you are not immune from what's going on globally. You are not immune from the economy. You aren't. The same inflation is your own inflation as well. Yours can't be different. So, but ethical investments assure investors that their investments are aligned with a cause that is good for all. I think that is the main thing you should just know, whether there is recession or boom. Am I investing in line with my moral principles? That should be your core and not the return. The return comes later. The return is not first. In the conventional one, the return comes first before I then think of what they are using my money to do. But in this instance, ethical investment is, I need to know what you are using my money to do. Is it in line with my beliefs? Is it in line with my faith? Is it in line with my principles? If it is not in line, then I will not do it. So I think once you establish that, return comes, is secondary, to be honest. So it's once you know that the cost in which you're investing is for the good of all, then that is okay. Then that is beneficial to majority. Now, but by nature, I've mentioned earlier when we're talking about return that ethical investment provides two principal benefits, economic and the social, which we've all agreed to. So if I use this example of an investor in a solar energy firms that provides beneficial electricity power in this our Nigeria, will you not be happy that people have access to electricity 24 hours in a day compared to how much is entering my account because I've invested in this solar company? So I think that is one thing we just need to get clear. And the same thing for the mutual funds, like our own allow as well. Because I'm selective in the kind of underlying that needs to go into that portfolio, into that fund, right? I need you to understand that it is not just about the return, but am I offering you a solution that is in line with your faith? If it is in line with your faith, then your return should be secondary, right? And so whether the recession is up, global economic headwinds, inflation is high, we are in it all together. Only that I'm doing something for the good of the people. And I think that's where I would just hang it, to be honest, and not just about return.
All right, as difficult as that pill is to swallow, I guess myself and the rest of the audience really have no choice. But I mean, we need to be very frank. There isn't any particular benefit in terms of, counteracting the impact of global economic headwinds, except, of course, the diversification benefit it brings to your portfolio as an investor, which I think we already established before now. All right, so I think we're through with the second round of our discussion. We'll be going into the third poll. Yes, we've had two polls already. We'll be going into the third poll, but before we do that, please be reminded, ladies and gentlemen, in the audience, please remember to put down your questions. We'll have a question and answer session at the end of this program. Please do so. Meanwhile, let's take the third poll. Yes, it's up. The third poll reads, are you inclined towards including ethical investments in your portfolio? I mean, we've talked extensively about the portfolio right now, or before now. And so tell us, are you inclined towards including ethical investments in your portfolio? Yes, no, I need to learn a bit more. I already have ethical investments in my portfolio. All right, let's do that in 15 seconds. Can we do that? All right. Okay, so I guess we've been able to convince the majority, or maybe they already had their minds made up even before coming. So 60% are inclined to including ethical investments in their portfolio. 28% of the respondents say, no, I need to learn a little bit more, while 11% say they already have ethical investments. Interesting. So this sets the tone for the rest of our discussion, but please be reminded, as I said earlier, we would like to have your questions in the chat. Please put down your questions in the chat. Please post your questions in the chat. We'd like to have them. Great. So we've had a very, very defined session up to this point, and it does promise to be a third wonderful session. We've had two sessions, three polls, pardon me, and we'll be going into the third round of discussions right away. And I'll be starting with Mutiat. Mutiat, imagine I'm someone who is getting very close to his retirement age, right? So I'm approaching my retirement age. Maybe in my 50s, approaching 60. So what should my portfolio look like?
Okay, so I think I'll start by telling you what your portfolio should not look like, or what I would advise you don't have in your portfolio. So if you're close to retirement age, so we are saying you're in your late 50s, early 60s, I won't advise you to go into stocks and equities. They're not very stable, right? It's always fluctuating, and it's neither here nor there at times. So I'll advise you to look at more of investments with fixed income. You have the federal government instruments, federal government bonds, you have Sukuk, you have mutual funds, you have allowed funds. Those are the kind of things you should have in your portfolio. Because you're at that age, it's too late for you to start taking risk. I'm sure you don't want anything that will affect your principal in any way. And you also need to ensure that you have steady return on investment, right? So that at least that can sustain you for a very long time. So look at instruments that have fixed income, Sukuk, federal government investments, mutual funds, and investments along those lines. And since you're also close to retirement, I would say you should speak to a professional, right? That is where you should start from. The professionals will be able to advise you and guide you in making the best investment and structuring your portfolio in general.
Okay, so assuming I want to wing it because I'm not ready to part with commissions and all of that, what do you think awaits me if I just decide to do things and try to get around it myself?
So the truth is that, right, when you try to DIY most times, especially when you don't have knowledge of the market, you are going to make mistakes. You're actually going to make mistakes. Your 50s and the 60s is not when you want to make mistakes. So you have to speak to a professional. So you have to wait. Do I want to pass me the commission and go to bed and sleep well, knowing that my investments are secure? Or do I want to gamble with everything I've worked for from my 20s up until my 60? I'm sure the later is what you will go for. So just speak to a professional, speak to us at FBN Quest, and we are always happy to help you.
Absolutely, absolutely. Great, fantastic stuff. Ifeoluwa, sorry, I have to come back to you. I have to come back to you. Give us 3 strategies that would be very, very important for anyone who is thinking of building and sustaining wealth. Just your own 3 key strategies. What will you say? 3 things that are very, very crucial if you want to build and sustain.
3 things. If you want to build and sustain, define your why for money.
Okay.
Why do you want to build it? Why do you want to invest? Why do you want to work? Any of it, define that. What is it that money enables you to do? Right? And so when you are able to answer the why, which is what some of these successful people, and that they've built their wealth, always answer is why do I need to keep it? Why do I need to invest? When there is a why and you are able to answer the why I want to have a lovely old age, I don't want stress, I want to be able to afford certain things without depending on any other person. Once you're able to define that your why, right, you're on the right journey or path in building your wealth, right? Another thing is you need to conduct your ultimate want analysis. And what is that? Our biggest problem really is the scarcity mindset that we have. It's not enough. This salary I'm earning is not enough. It's not enough. And with that, we don't tend to save nor invest. At least if you have the culture of saving, you can then graduate to investing. Now, when you don't have that again, you are not building any wealth. And so you won't be able to sustain anything. So then we need to learn to live within our means. That's another thing. We need to learn to live within our means so that I earn 100. I shouldn't borrow more before end of the month. And even at that 100, I should be able to save certain percentage of that as well, or invest. You know, like I said, you start saving and then you graduate into investing, two different things. And, you know, once you have that, you are on the right path. Without you're building your wealth. Those that are wealthy, it doesn't just land overnight. It's an intentional thing. You have to be conscious about it. You have to be deliberate in doing it. So somebody all of a sudden just had 100 million. It's not all of a sudden the 100 million dropped. We shouldn't give, it is not, and we are clear about gambling that is not ethical in here, right? So it is not, you need to build it over time. And so I'll stop at those three that I've mentioned.
Great. And, you know, I would, just before I come to Mutia, I would introduce the economic perspective to it because I'm an economist by training and by profession. You know, there's the liquidity preference theory that suggests that we would demand for money for at least three purposes, for transactionary purposes, for precautionary purposes, and for speculative purposes, right? So that kind of gives you an idea of what you should do with your money. So someone gave me a rule of thumb, right? You could divide your earnings, this is just personal finance advice, into three parts. One for transactionary purposes, second third for, you know, precautionary purposes, savings, and then maybe the last third for investments. Let's not say speculative purpose, because then we'll be raising issues of whether it is ethical or not, and I want to avoid that in this setting. So very, very lovely response. Mutia, please, I would want you to say one or two things regarding strategies necessary to build and sustain wealth. I'm sure you have something for us.
Yes, I do. Okay, so I'll still start off from where Ife left. So it's important that you save and you invest. Saving is keeping your money. Investing is growing your money. So those two things are extremely important. The next thing is to balance your portfolio and make sure you diversify your portfolio. And the best way to do that, again, is to speak to a professional. And the third way is to have an estate plan. So it's one thing to save, which is keeping. It's another thing to invest, which is growing. But how do you now sustain the wealth? Sustaining is you've worked for this money, you've saved, you've invested, you want to utilize it for yourself. You also want to ensure that your loved ones and beneficiaries can also gain from it. That is where having an estate plan comes in, to ensure that this money is not just there, it is sustainable and it is useful to you, your loved ones, your beneficiaries, and even future generations if you wish.
Great, fantastic. I love that. Okay, so I will stay with you, right? I will stay with you. And I would, you know, I would paint another hypothetical situation. It's anecdotal, and pardon me for that. But what financial advice would you give me in terms of investing or planning my child's education? How soon also, is it ever too soon to begin to put my will together? So I've lumped those two questions together. We want to unbundle and unpack them. Or do I do that for you? Let me go over the question again. Give me financial advice on, you know, what investment or plans I need to put in place, you know, to provide for my child's education as I go forward.
Okay, so it's a good thing that you want to plan for your child's education. And top of my head, what I'll tell you is that before you talk of the investments, you must have a plan in place. So for a plan in place, my advice is have an educational trust. So what is an educational trust? An educational trust is a trust between you, the settlor, that's the father or the mother, as the case may be, and the trust company or the investment company, that's FBN Quest, for the benefit of a third party, the third party being your children. And what this does is that you put more funds in the trust, and then you go to bed knowing that the trust will fund your child's education to the extent at which you had stated in your trust deed. So it can cover education, tuition, transportation, extracurricular activities, whatever you want it to cover, it is what it is going to cover. That is the plan you've put in place. The second arm is the investment. So when you put your funds in a trust, your funds don't just sit there, your funds are invested. So you can now tell us if you want us to invest those funds in ethical instruments, right? So that is also available. You can tell us at FBN Quest that I put these funds in a trust for the benefit of my children, However, I want it to be invested ethically. So that works. So have an estate plan in place, have a trust for your children. The good thing about having a trust is that whether or not you're in the picture, once the trust is fully funded and your returns are coming in steadily, your kids will continue to go to school because the trust will continue to pay their school fees, whether or not you are in the picture. And that will give you a bit of comfort. So with respect to the second half of your question, which is having a will and how soon should you start? The best time to start is now, because only two things are certain in life: the fact that we'll pay taxes and the fact that we are going to die, right? So what are you putting in place for your debt? You've had all these investments, you've enhanced so much wealth and assets, you've invested this money, but you also need to have a plan to pass it down to your loved ones. Because if you do not have a plan in place, when you're gone, you can't tell who would inherit what or what will become of your investments and your assets. So the right time to start is now.
Great, lovely. I mean, I perfectly resonate with that. I couldn't ask for more. Thank you, thank you, thank you. I think at this point, I would like to request that we give our speakers, Ifeoluwa Oladapo Dixon and Mutiat Olatuji, a round of applause. I think they deserve a lot of commendation for the good job they've done. They've taken us through ethical investing, the various aspects of ethical investing. We've talked about some of those necessary steps you need to take in investing ethically, as well as what promises there are. They've opened our eyes to realities. They've not tried to pull the wool over our eyes. They've tried to, lay it very bare and make us understand what is at the end of the ethical investment journey. Perfect. I think you guys should be commended. You've done a great job. You made my work very, very easy. You've given us a lot of things to really, really sit back and think about. And I think the audience would be grateful. I can see a lot of, okay, it's not a lot yet, but we can see one or two people. I think we could do better than this. Come on. They've done a wonderful job. I think they need to be commended much more than this. Wonderful. Wonderful. I commend you guys. You've done a very great job. Thank you, thank you, thank you. Wonderful job you've done. At this point, I would like that we begin to ask our questions. We're moving to the question and answer session. We're moving to the question and answer session. And please do post your questions on the chat. Post your questions on the chat. All right, so we take the questions. First question goes to Ifeoluwa. Let me start with Ifeoluwa. Someone is asking, I would like to see data to convince a prospective investor that returns from ethical investment is comparable to conventional investment or traditional investment. It's interesting. What have you to say, Ifeoluwa? I mean, we've had a very lengthy discussion in this regard.
So the data are out there. They are out there. So you want to pick FGN Sukuk versus of the same year versus the conventional bond and do your analysis on return and see what that would give you. You want to pick our allowed fund versus our bond fund and do your analysis and see. So the data are out there. There is no, or for equity as well, look for any Islamic compliant equity or ESG company if they are listed, which I do not think, I may be wrong, and just pick it up and run it vis-a-vis another company that it's not into that space and see.
Okay, okay. All right, so we'll move to the next question. This one for Mutiat. Mutiat, this participant is asking, what percentage of my income is advisable for me to transition into ethical investment? What percentage? Do they go by my rule of thumb, 30%? What do you say? Mutiat? The question is for you, Mutiat. Okay, Felua, do you want to take the question? Okay, Mutiat is back. All right, go ahead, Mutiat.
Yeah, so it depends really. If you want to diversify your portfolio, you can put your investments in different boxes or in different portfolios. However, if you are keen on ethical or faith-based, then it has to be 100% of your funds in that instrument. If you want ethical, then you have to go 100% ethical. If you want faith-based, then you have to go 100% faith-based as well.
Okay, wonderful, wonderful. So we move very quickly to the next question. What special products do you have specially targeted at women? I know we talked about gender considerations as part of dimensions of ethical investing. Ifelua, what?
So for us at FBN Quest, right, specially targeted towards women, we do not have one at the moment. But all the funds that we have, whether from the trustee side of things or for the asset management, entire FBN Quest, things that the recognized genders can invest in.
Okay, great. Okay, so I would try and flip things around a little bit. The question is quite similar. So what does FBN Quest have for Nigerians in the diaspora? So we're looking at a question from a participant. He's saying, what investment opportunities are there in FBN Quest for folks outside of Nigeria? So we've looked at women. Mutiat, is there something for people in the diaspora, investors in the diaspora at FBN Quest? You are muted, Mutiat.
Oh, okay. Sorry, I didn't realize I was muted. So the truth is that whether you are in the diaspora or you're in Nigeria, you can key into any of the investment portfolio that we have. We also have investments not only in Naira, but also in dollars. You can have Euro bonds and all of that. Even if you're in the diaspora, you can have all of those portfolios with us. And even if you're in the diaspora, at some point in time, you must have had a bit of Naira savings or the other that is possibly still sitting here in Nigeria. You can move that into our position. We invest, we advise you on the portfolios to invest in and take it up from there.
All right, great.
Sorry, if I may just add, in addition to that, we still have dollar, dollar investments as well. So either way, if it's in dollars or if it's in Naira, FBN Quest is well positioned to take a position for you.
All right, wonderful. So I think I will take one more question, and I think we would have to call it a day. What ethical companies can one invest in? So I know you can't possibly mention all of them, but just give us an idea of what ethical companies one can invest in Nigeria. Perhaps you want to look at the Nigerian Stock Exchange or even on the NASDAQ, the NYSE or S&P 500, Just give us an idea of one or two companies you think we can invest in. Or you don't want to do that, it's up to you, really.
So, Mutiat has mentioned, we have faith-based products, be it on the trust side and also on the asset management side. We have faith-based products. So, anyone which is still ethical, you can't come into our faith-based products.
So I realize you don't want to mention company names, and that is fine. And that was my consideration.
No, so we've mentioned in a general way during the conversation. If you have a recycling company, if you have renewable companies, right? I use the solar farm, energy firm. So these are. So, but I don't have a name. But if you know a name and it's into recycling, that's green investment for you if you want to go into that, which is ethical.
Thank you, Ifelua Oladapo Dixon, Mutiat Olatunji. You've been fabulous today. You've been wonderful. It's been a very interesting session and conversation with you guys, and I look forward to another session. Let me also thank the members of the audience, all of you in the audience who have participated in this webinar. Your questions, your interaction, they've been very, very engaging and interesting. Thank you for joining us on this edition of Leading Conversations with FBN Quest, which was focused on planning your future with ethical investment. We hope you found it informative, and we look forward to engaging with you further in order to take advantage of the opportunities that we've discussed today. We have several more insightful and relevant topics planned in the coming weeks and months. Follow us on social media platforms, Twitter, Facebook, Instagram, LinkedIn at FBN Quest today, so you don't miss out. If you have any immediate questions or please do so through this media that I have already mentioned. Thank you once again to all the speakers, and thank you to the audience, all the participants who have joined. It's been a wonderful session. Thank you, and bye-bye.
This is Mo. She works hard every day to make our solutions better for you. But she's not alone. Mo is part of a system, an ecosystem, working together to make sure everything runs smoothly. There is Mo in Human Resources, who just hired Mo the intern. She is excited about new possibilities. Mo in Finance and Legal and Risk Management. Mo in Customer Services and General Services and Trade Services. Mo in FBN Quest Trustees helps Mo, one of her favorite customers, secure her legacy in a trust that will live long beyond her years. Mo from Wealth Management helps Mo decide the right investments to grow her fortune. Mo discusses with her personal financial advisor from FBN Quest Asset Management, who uses real insights to provide solutions that are exactly right for you. And from Mo, who has just invented an app that will change the future. Mo from the investment banking team is helping her raise financing so she can scale across Africa. So who is Mo? Mo is you. Mo is us. All of us with hopes and dreams, which is why our solutions are shaped by your goals. Mo is FBN Quest, and we are powered